Hi everyone, this is Dmitriy Balkovskiy of the Reactionary Vlog, and let me introduce my recent interview with one of the world's leading experts on gold as money and gold standard, Nathan Lewis. Over the years, Nathan has published several books on gold standard, its history and economic underpinnings. The first of them was titled Gold, the Once and Future Money. It came out in 2007 in English, was published by Wiley, and your humble servant translated it and published it in Russian in 2011. Since then, Nathan published several books on the same topic: Gold, the Monetary Polaris in 2013, Gold, the Final Standard in 2017, and Nathan continues with his regular comments, regular articles on his website, New World Economics, and he also publishes the Polaris letter. As you can see here, I linked both of them in the description below. This interview is roughly divided into three parts. First, Nathan talks about his books and his experience in the gold investment community over the past 20 years. He's a veteran. He also talks about stable coins. Then he gives us his forecasts on the price of gold for the next 3 to 5 to 8 years. And then he talks about financial apocalypse, of course, the possible scenarios about the great changes, great financial changes awaiting us in the near future. So without further ado, here's my interview with Nathan Lewis. Good day, ladies and gentlemen, and this is Dmitry Balkovskiy talking to Nathan Lewis, one of the probably top 5 experts on gold and gold standard issues in the world. And we've spoken a lot quite a few years ago, and now we're sort of doing a reunion. Gold and silver issues are back on the agenda. They have been for the past probably 2 years. So we want to touch base and see what changed over this period of time, over the past 10, 12, 15 years, and discuss where it might go in the near future, in the next 12 months, in the next 24 months, maybe. All right. So, Mr. Lewis.
Great to be here.
Yes, good to see you. The last time we spoke was probably 2015 or something.
Maybe even earlier, 2011 or 12 or something like that. Yeah. So now I have 4 books out mostly about economics, not investing directly. About with what I call the gold trilogy, 3 books about the gold standard. The first was Gold, the Once and Future Money, and that came out in English in 2007, and actually had a Russian edition in 2010, I believe. Yes, and it was also published in Korean, Chinese, and German. So although that came out in 2007, I actually wrote most of the book in 2000, so it was really kind of inspired by the crises of the late 90s. Now it's all ancient history, but it was supposed to be a timeless book, and I think it has stood the test of time. And then I followed up with 2 other books: Gold, the Monetary Polaris in 2013, and Gold, the Final Standard in 2017. And then I wrote another book, The Magic Formula, in 2019, which has some monetary elements to it. I'm actually working on a 5th book now, and it's actually about inflation, co-authoring it with Steve Forbes and Elizabeth Ames. It should be out next year, particularly since 2019 or so. Inflation has been a hot topic, and COVID, all the responses of central banks and all this crazy stuff. Now we have cryptocurrencies and so forth to talk about. So it's been an exciting time. All these topics are becoming more relevant, I think. And I think over time there's been a sophistication of people's thinking that may, eventually lead people back toward the idea of a gold standard system. Over the years, what changed? First of all, do you still believe in the possibility of a gold standard in some shape or form? Or the cryptocurrencies didn't really move you? I know, because I've seen you have this beautiful piece on the can of artists' theses. I just thought it was very nice. So it doesn't seem that you were swayed by any of this newfangled stuff. So what's your view? Things have come a long way, actually. There have always been gold standard fans, but when I first kind of got involved publicly at the beginning of the 2000s, they embraced the idea of a gold standard system, but there was very little sort of theoretical backing to it. It was like just this hodgepodge of silly nonsense. This is the Murray Rothbard fractional reserve banking, devalue the dollar so it matches the amount of gold you have in the vault kind of era. Just this like silly garbage. People at the time kind of mocked gold standard fans, even though Alan Greenspan was kind of keeping the dollar linked to gold at that time. They kind of mocked gold standard fans. And for the most part, the gold standard people deserved to be mocked because it was just so horrible in those days. So, my first book was aimed at amending a lot of those problems, because I hung around in the 90s and in the early 2000s with sort of the intellectual elite of these topics and learned from them more or less directly, like from direct personal contact. And what I learned from that is there were people who understood these topics pretty well. It was a really small number, like less than 10. And none of them ever wrote anything down. So the number never grew more than 10, right? And they're all getting old. So I undertook a 20-year project to write these things down and expand them, and not just kind of record what was known, but I think our understanding has expanded quite a lot since then. And that has, to a certain degree, kind of spread out, and people have read the books and gotten a lot more sophisticated about these things. Another thing that happened was, before the 2008 crisis, people really had no idea what central banks did. It was just a mystery box. And they had...
Yes, that's true. I remember.
Yeah, you remember, right? People just had no idea. And it had some kind of interest rate policy. And people, not just the general public, but even Wall Street professionals and so forth, they paid a lot of close attention, but it was just all about interest rates, right? They didn't really know what was going on inside the box. And 2008, the crisis, because central banks started doing all this stuff, right? All this weird stuff. They said, it's not about interest rates anymore. They're doing they're doing QE and they're doing discount lending and they're, it's all this stuff's going on. So they kind of had to figure it out. So the kind of general understanding of what central banks do or can do, what their, range of actions is, became a lot more sophisticated in that time. And that's still ongoing. It's becoming a lot more sophisticated now, I think. So that's been good. And of course, the other thing is also right around 2009. Bitcoin began. And Bitcoin itself, I think it's mostly just a speculative football, but there are thousands of cryptocurrencies. And also what came out was a whole genre of stablecoins like Tether linked to something. And there's now probably a dozen gold linked stablecoins, which are actually pretty good. About 5 years ago, I went to a conference or talked to purveyor, actually, a gold linked stablecoin, and he had a list of all the gold linked stablecoins in the world, and out of like 60 names, about 5 actually had a coin. The rest were just ideas.
Yeah, I think you published it, I remember.
Yeah. So it was interesting. I just got a rundown of the gold stablecoin world. That was even just 2018 or so, and it was very nascent. And but now it's it's starting to become a lot more viable, and also the big dollar stable coins, like, it's the most obvious thing. Have a stable coin linked to a dollar, have a stable coin linked to the euro. Even in 2019, Tether had a outstanding, you call it market cap, outstanding balance of like 2 billion, which seemed like an incredible number. Now they're up to 60 or so. So, that expanded 30 times in the last 2 years. And along the way, because I was actually involved in a little bit in a stablecoin project in 2019 and got an idea of what was going on. So what happened was there were all these very smart guys, basically kind of computer science guys and tech people, starting to get interested in like a dollar stablecoin or whatever their bright idea was. Commodity basket link stablecoin, or there was all these every kind of variation. There was someone trying it, and so they were sort of learning. They're sort of smart, technically minded people, and they're learning it from scratch, as opposed to these economists who. The training of an economist is they read something in a book and they're told to regurgitate it, and most of them never move beyond that. And the other thing, of course, is that they actually made the things, so they actually did work, right? They were tested in a sense, and if they didn't do things properly, things blew up in their face. And so there's been this dramatic expansion of knowledge, I think, among the stablecoin and people kind of involved in that space, involved in the crypto space and involved in the stablecoin space, about how to do these things and what you can get away with and what you can't get away with. And there are all these very strange, variations like algorithmic stablecoins. And and so forth. And they tried them, and some of them worked, and some of them weren't so hot. And I think that has been a big change. And then, I think the last thing to point out, for a long time, I've kind of expected, kind of this fourth turning historical hypothesis that many people are familiar with now. You could see the elements of crisis coming together, right? It was like, in the United States maybe you're not American, maybe you don't know this, but in the United States in 1855, everyone was talking about the growing problem of slavery and how it was had to be resolved somehow. But there was nobody who knew that the Civil War was going to start in 1860 or 1861. So it kind of they could see things lining up, but they couldn't say what was going to happen. And in a similar sort of way, a lot of things that are illustrated in that fourth turning book from the 90s were obviously coming together very much as described. And then I think COVID, launched this new period of chaos and disorder. Everyone has this feeling that we're not going back to the way things were, and something's going to happen. So it's a very interesting time, I think, because now is the time when central banks might make a big mess of things, and also when new ideas can actually be implemented.
This is what I was actually really wanted to hear from you, being probably not a proper gold bug, I wouldn't call you that, but proponent of gold standard, but without craziness and apocalyptic leanings and all that. So you know who Doug Casey is, right?
Yeah, sure.
Yeah, there is this Doug Casey syndrome, predicting the apocalypse in the next 12 months, and it never happens. Even though he was right on many occasions, but the event which so many people have been expecting hasn't happened yet. It doesn't mean that it will not happen, but you know what I'm driving at. What's your view of it at the moment? How we?
Yeah. Well, in the precious metal space and kind of related topics, a lot of the experts, a lot of things that are promoted and publicized and popularized are people who make money in the business. They sell gold coins, they sell research newsletters, they have some kind of product that's related to gold, like a mutual fund or an ETF or one of many different things. And the money from the business pays for the expert commentary, and that's fine, right? I mean, experts are expensive and they have to get paid, and it's just like Wall Street, right? Wall Street is 100% bullish on stocks all the time. You're never going to see a guy who runs a mutual fund stand up and say, "Sell my fund right away," right? Or bonds, right? I mean, obviously, today's prices. Why would anyone own bonds? But Wall Street's never going to say, "Yeah, sell everything," right? They have their 60-40 kind of pitch, since that leaves out so much. Then you've got the people who are the alternative people, and so it's a business, and they're kind of, and sometimes gold and stuff does go up, and who knows when, really, right? So it's reasonable. I'd like to hear their side, their view of things. But yes, you're right. A lot of this stuff doesn't happen. But on the other hand, to give Doug Casey credit, price of gold is let's just say it's $1,800 today, and it used to be $35 back in 1970. It's gone up 50 times, and that happens sometimes, right? It does take place, not all the time, but it's not some sure thing, but it does take place, and it appears to me that we are indeed in the early stages of another one of those dollar decline, gold rising periods.
Oh, good. Nathan Lewis made his call.
Yeah, it appears that way, but it's the future, and if predicting was the future was easy, this speculation stuff would be a lot more profitable.
See, when people say that Wall Street pushes stocks and bonds, and the gold coin sellers do the same, I reply that I'm not selling gold coins anymore. Actually, I'm doing info stuff. But I say that we are $1 and Wall Street is $10,000. What would be the comparison in terms of volume? So it's not really fair to us to compare us to them. If in Russian there is 2 or 3 channels in Russian YouTube on matters gold and silver, like proper gold and silver, and there are dozens and hundreds of channels on how to strike rich in the stock market and crypto space, and it's just no comparison here. So it's everyone is singing their song, of course, but I see, Nathan. I always enjoyed your reading your stuff because you're so smooth. You're not, there is no sharp edges, but you're basically saying the same thing, like Adrian Ash from Bull and Vault. He's quite radical, but he's not breathing fire in his pieces. But if you read him carefully, he's that's my style too. I used to be. It's going to end tomorrow, but it looks like.
One of the things you learn, as a speculator, is that you're wrong pretty often, right? Even the greatest guys are wrong 30% of the time, and that tends to make you humble. But if you talk to some of the people who have really proved themselves to be among the greatest money managers of our time, like Ray Dalio or Jeff Gundlach or these guys, they kind of share our views, that we sure are in a weird position, and in the past this has meant things like gold are a nice place to be. Since a lot of people kind of put gold and cryptocurrencies in the same kind of basket, which doesn't make any sense to me, but I should make a few points which you and I are very familiar with, but others are not. In terms of an asset, in terms of investing, in terms of a role that gold bullion plays in a portfolio, it's basically a form of cash. And as I wrote 3 books about, it's played the role of cash for thousands of years. And the basic characteristic of it is that it doesn't change in value very much. So when you see the price of gold today costs $1,800 to buy it, and in the past it cost $35, it's not because gold is 50 times more valuable today. It's because the dollar is 50 times less valuable, more or less, right? When the price of gold changes $20 tomorrow, who knows why, right? You don't have to take it down to that sort of very small scale, but that's the big picture. Is gold didn't change very much, and the currency did. They're floating currencies, and so from an investing standpoint, it's just a place you can go when currencies get devalued. And people are usually pretty familiar with emerging markets. Mexican peso, for example, used to be 3 to the dollar, and now I forget what it is now, 30 or something like that. And then it's real obvious, right? It's like, well, obviously the peso is declining in value, and obviously if you're in Mexico and you could take your peso and put them into a dollar bank account at Bank of America and let the currency be devalued, then come back and then buy stuff cheaply with your dollars.
Right.
Great idea, right? It's very easy to understand that, and that's basically what you're doing with gold. You're getting into something. Doesn't really go up, but it just holds steady while currencies decline, which is very different than these, floating cryptocurrencies like Bitcoin, which are just speculative footballs, and they go up and down in crazy manner, and who knows what will happen in the future. It'll go up, it'll go down, I don't know. We'll see.
What really strikes me as of the past 18 months, I'll tell you that I'm very COVID skeptical. I do not believe that we're being chipped by Bill Gates. Lots of people in Russia believe that, like half the population. Even the most medical of medical professionals would agree that that they're pushing it too hard. There is a sense of desperation here in Russia. It's amazing. Russians. They don't want to be jabbed. It's like 12% of the population got vaccine. So. Russians are very skeptical. They're very hard to ride. They're very, very hard to ride. Do you have a sense that the powers that be feel that the rope is running out? What's a good English expression? That there is a Wiley Coyote moment or something? Because I have this sense here in Russia, and Russia is not the worst in terms of fiscal, budgetary things and money printing. Do you have this sense for the United States, for the world as a whole, for China especially, maybe? Are they running out of time and they feel it, cold breath?
Unfortunately, we can only guess. It would sort of make sense that maybe there'll be some actually sort of engineered collapse of some sort, which some people argue happened in the early 1930s, that the Great Depression was more or less intentionally created. Interesting hypothesis. And that kind of makes sense to me. If you look at if you think that the powers that be own the big banks, or at least run them, and you look at what the big banks have done recently with this just like phenomenal derivatives, counterparties issues, and so forth. But in other ways, they've been pretty conservative recently in terms of capital ratios and all that. So yeah, it kind of makes sense. It kind of makes sense that there would be some sort of engineered disaster. It's hard for me to say either way. Even if you research those topics and you have a view of those topics, my conclusion personally has been, well, we just don't know. So just try not to do anything stupid, right?
Okay.
I tend to have a pretty conservative portfolio, which has a fair amount of gold bullion and a fair amount of cash, and a fair amount of real conservative, defensive, dividend yielding companies and that sort of thing.
So shall we do a small forecast as a gut feeling? Again, as a gut feeling, do you have anything to say for the next 3 years, 5 years?
I've been talking about a 5 to 8 year time frame.
5 to 8 years.
You have to make that a little shorter now. It's 3 to 5 or 6 or something like that, which kind of follows that fourth turning historical model. And it might work out, it might not work out, but I just think it's a handy way of getting your mind in a different space where we have this hits, if you follow, it's kind of like this 80-year cycle, this once in a lifetime dramatic event or, period. It's not like, 3 weeks or something like that, where things just end up completely different than when they started. And the last, World War II was the last sort of global event of this type. By 1948, things were just completely different than they were in 1937. I think that it's pretty likely we're entering in that kind of period. And if you're going to have turmoil, you're not really going to have asset markets at incredible century highs for the whole time, right? Stocks might keep going up for a couple of weeks or months or whatever, but probably sometimes during this period, stocks are going to get really cheap. And the transition of going from really expensive to really cheap is really unpleasant for people who hold stocks. A lot of government bonds, I wouldn't say they're completely worthless, but not very safe. And let's put it that way. Gold will be what it's always been, which is simply a reliable holder of value, just kind of stays steady. Cryptocurrencies might go up and down, whatever. Probably an element of this is just the multi-decade trend of governments toward chronic deficits to pay for social programs, which are getting more and more burdensome as people get older, and plus, which is added now, just especially in the United States, just spending money for no good reason at all, and very high debt levels at governments and so forth. It seems to be pointing toward an end game, which I think we have entered in 2020, which is, as many people have said, we're going to end up, the central bank's going to print the money to pay for all this stuff. And that's exactly what they have been doing, but the difference is they're not going to get away with it. Because they're already doing it. We don't have to predict that part. They're already doing it. But they're not, and they've gotten away with it, and they're not going to get away with it for all that much longer. In terms of where this goes, as I've said, the gold is just the flip side of the currency that it's priced in. So if you say, what's the price of gold in yen? What's the price of gold in euros? What's the price of gold in dollars? It's just a way of gauging the value of those currencies. Gold itself is relatively, not perfectly, but relatively stable. You can look at it as a foreign exchange rate. I could easily see as ending up at certainly $10,000 per ounce of gold by the end. And it could be some much larger number, 100,000 or a million or whatever. If you just looked at the last 50 years, since the dollar left the gold standard in 1970 and 1971, there's really, unfortunately, our historical examples are very small. There's only two, really. There was the 1970s, where the dollar lost about 90% of its value. It was about a 10-to-1 decline. And then there was that 2000 to 2010 period, let's say, where the dollar lost about, just kind of roughly went about 6-to-1. So it's worth about 1/6 of what it was worth then. So today we're roughly 1800. In 1990s we're about 350. So more like 5-to-1, I guess. So if you look at those two events, of course, inflation of the 1970s, stagflation of the 1970s was big deal, very dramatic, but it wasn't hyperinflation. Things kind of held together, and people went to work, and life went on somehow.
Trains ran, yes.
Yeah. And there, it wasn't like Civil War or anything, right? It was a big deal, but life went on. And then there was that 2010 period where, again, I think the rising price of gold during that time really does represent more or less the degree of dollar decline during that period. But for various reasons, it was almost painless. People almost didn't even notice, right? If you were involved in in gold, which was the best performing asset of that time, you made a ton of money. So that was great. But if you were just kind of, average stock and bond holder, you weren't wringing your hands over stagflation like you were in the 70s, you could just kind of, they didn't make any money. U.S. stock market in 2010 was about where it was in 2000.
Yeah.
They didn't make any money, but they were seemingly happy to, life went on. Well, though, of course, there was a housing crisis, but that was almost related to something else. So the point is that this doesn't have to be some like giant catastrophe. Maybe it'll be like it was in 2000, 2010. The gold guys will make money. We'll make 5 times our money, and everyone else will just kind of be milling around as if nothing's happening, right?
Could be and could be.
I don't know. Yeah, but right? I mean, the price of oil was $20 in the 90s, and a gallon of gasoline was $1 or less. I remember filling up for 89 cents, and then we went to $100 for a barrel of oil, and
148.
But no one really did. People just went along with it. So it might be like that. Maybe it'll be like that. Maybe we'll go to $400 oil, and our gasoline go to $10.
It's going to be a very different world.
But somehow it'll be smooth enough that people are okay with that, and gold will go. Another 5-to-1 move would be like 9,000 or so dollars. Maybe not so high, 6,000, let's say. That's the mild scenario. So it doesn't have to be like in Doug Casey, there's going to be civil war or something like that. And then, but there, of course, is the more dramatic scenario where we do get into a situation where just things go completely kerflooey, and it's essentially the dollar becomes it not entirely worthless, but worth so much less than it's worth today that it's it's almost worthless. And this is a very common occurrence. If you look around the world, it happens all the time. Well, people in Russia, right? We're now at 75 rubles per dollar. What was it in 1995, right? It was 5.
Yeah.
Of course, there was a period before that. 95 is not a good point, but there was a period before then. I used to work with a Russian guy, and I had this 100 ruble note, right? 100 rubles is now like $1.20. And he said he grew up in St. Petersburg during the Soviet period. He said, yeah, first time I saw one of those, I was 17 years old, because it used to be worth a lot of money. And we might say the same for the $100 bill, right? We'll be buying coffee with $100 bills. Happens all the time. All the time.
Okay.
So it just makes sense to me that something like that would happen.
All right. And one last small question. If we go down this second road towards like complete destruction, not only the US dollar, but all other, US dollar derivatives, euro, ruble, and yuan, and all that. What would be one thing that you could imagine that would be really striking? Something like, a sign of the epoch or something. What would be the one striking feature of the collapse for you?
Well, all these things could happen in terms of, political things, right? Redrawing the lines on the map kind of thing. There is certainly potential for that.
On a day-to-day level, not in a political sense or macroeconomic sense, but when you go out onto the street and you see something, for example, or see something in the shop, I don't know, what would that be?
These things, they kind of just catch up on people. They're fairly slow. Even a hyperinflationary, let's pick a number. CPI goes up 100% a year. That's a big number. 100%. It's still it's like 8% a month, right? Or less. It's about 6%. And 6% a month is it's gasoline's 6% higher. You can just kind of slip into it without, saying, oh, well, this is the day, 100%. So the price of gasoline it goes from, let's pick a number, $3 to $6 in a year. And the next year it goes to $12. The next year it goes to $24. That's actually hyperinflation. But it's amazing how you can just kind of be there and it's happening all around you and you just don't know what to do.
Right.
And no one shook you and now you have to do this. Even our political system in the United States is kind of similar, right? We used to have a constitution where we had an elected president. Now we don't have elections anymore. We just have made up stuff.
Okay. All right.
And everyone's sitting around kind of saying, well, what are we going to do? Right?
Watch some TV, maybe. Yes.
Yeah. When do we get up and do something?
Yeah.
So unfortunately, these economic, when you actually live through them, It's easy to read the history, right? But when you actually live through them, it can be a lot like that. You just kind of sit there and, gold's at 2,000, and then it's at 4,000, then it's at 5,000. You say, well, gold's at 5,000, meaning the dollar has fallen in value a lot. Obviously, I should have bought some when it was at 1,800, but it's not 1,800, it's 5,000. So should I buy some today?
Right.
I go to 3,000, right? Was it 3,000 just 6 months ago? Then you just kind of sit there, can't decide, right? Unfortunately, that kind of thing is the way it happens. But what comes out eventually through this period, and I spent a little bit of time looking at Latin America, because all of Latin America had hyperinflation in the 1980s. Right. But it was this kind of hyper. It wasn't like the $1 billion banknote Venezuelan hyperinflation. It was like 60% a year for a decade, and sometimes it'd go up to 120%, and sometimes it'd go down to 40% per year, and you could kind of get by and show up for work. But after 10 years, the currency was worth 100th or 1,000th of what it was worth before, and it just, all the old stuff is gone, right? Social Security and pensions and savings, it's just gone, and you start from scratch. It's all, it's kind of cash flow basis. Everything's very hand to mouth.
Right. Yeah, but one more thing to be said about that is when Latin America had hyperinflations in the 80s, the rest of the world was rather normal. But these days things are different. So that's things changed. That's what I'm driving at. Things changed a lot in the past 10 years. It's crazy. It's crazy.
Yeah, we all have this impression that things are changing rapidly. We don't really know where it's going. In terms of some of the things I'm interested in, what I've been telling people recently is my book, The Magic Formula, which came out in 2019, was very much focused on this. Is we're in the period now, all kinds of stuff's happening, and there's two elements. One, what's going to happen? Well, we can guess, but who knows? And two, there's not a whole lot we can do about it, in the sense of, these are factors that have been building up for decades, right? Like government debt, or the spending habits of Congress, or the weaknesses of the political system, or Social Security in the United States, Social Security and Medicare and all this stuff. It's been building up for decades, and it is, technically it's solvable. Technically, you could write some legislation and poof and make all the problems go away, but obviously it's not going to happen. 98% of everything's kind of focused on that. But I say, okay, well, let's just assume that all that stuff goes to hell. And then what? Well, now we're going to have some solutions, because everything else just burned to the ground, basically, right? It's like the period after World War II. Well, everything is rubble. We finally stopped fighting. Right. Now what are we going to do? And you start to make new alliances, and you set things up in a different way. And there's like this, the seeds of the post-war era are sort of laid. And I say this is the time now when we should talk about what we want for that future period. In Russia, in the United States, I think we've proven that this sort of mid-20th century socialism, big federal government socialism, is not so hot. And we should have a new proposal, which is maybe not the 19th century model, the 19th century minimalist model, but something that is, arguably somewhere in between. And I would use, something like Singapore and Hong Kong as an example. Enormously successful, powerful economies, wealthy people, kind of a libertarian environment, pro-business environment, but they have public school systems, and they have public universities, and they have public health care. They have a healthcare system.
But they're poor demographics, though. They have the lowest birth rates, Hong Kong and Singapore.
That's another issue, yeah. But nevertheless, in terms of economic policy, it's pretty good. So I think we should start to make some ideas about that. And another thing, my focus on monetary policy, we may see, if things blow up, people are going to say, well, we can't leave things in the hands of people like Van Bernanke or Jay Powell or these guys anymore. I was there. I listened to them say the whole way down how wonderful things are and how things are going to get better and how they have everything under control. And it was all a bunch of crap. You can't put things in the hands of people like that anymore. It's not just because they're bad people, but just they're in a situation where they come under political influences and inevitable things happen, which have always happened in the past. And we say, well, now we're going to give up on this central bank manipulation and then maybe go to a gold standard system, or maybe gold-based cryptocurrencies. Stable coins will be very popular, or maybe it's not gold-based, maybe some other kind of stable cryptocurrency, whatever it is. In that case, it's a move away from big government money to alternative private market created money, which is a nice idea. Bitcoin is not that. Bitcoin is, like I said, speculative football. But Tether is kind of getting there, right? So that might be part of it. And that's the way it was in the United States. In the Constitution, the government was out of the money, and all the money, all paper currency, was issued by private banks, hundreds of them, right? They're all linked to gold. That was that system, and maybe we'll go back to something like that. But what I say is, you got to do the thinking now, because when it comes time to do stuff, there's not going to be any more time to think about it anymore. You know, you're not going to have 5 years to write books that have no direct political influence, right? It's going to be, well, let's just gather up everything we know, have a debate, but we're going to have a solution in the space of 6 weeks, right? That's the way it is. You're going to have to do something, because you're going to be sitting in rubble. I think it's good in that sense. I think we're building up. We're in that period where we're building up the new ideas, and I think, once again, gold-based currencies should be part of that, and we're moving politically in that direction. When I told people, well, I'm writing books, I wrote books about this stuff now, because when the time comes, you can't say, well, what should we do? I say, well, let me get back to you in 3 years. I'll write a book about it. Yeah, that doesn't work. Yeah, can't do it.
All right.
So
all right.
My books are in the can. You know, the most important ones. We're coming out with more, but that part has been done, and I hope people will.
No, it was your book in Russian is popular. Still remains. Good. You know. Yeah. People read it and read your articles. So yes, and people are interested in things that we do and say. So yes, we should. I should thank you on behalf of the Russian audience. Yeah.
We have a print edition of Gold, the Once and Future Money, but my second 2 books about the gold standard, Gold the Monetary Polaris, and Gold the Final Standard, I made them available in free PDF format, because writing books about the monetary history, it's not a very profitable thing. So, but I want people to read it. So it's available for free on my website. And if you do a Russian translation, you know, using a Google or whatever, Google Translate.
No, it should be translated properly. Google Translate.
Okay. It should be translated properly. But if, you know, someone wants to go translate it properly, you know, there's a university student in Russia who wants to take on that project. Go right ahead. You have my permission.
Okay.
My book was formally published in Germany through Wiley, this big business book publisher.
Yes.
And I never saw 1 penny of royalties from that. So if you steal it, it's okay with me.
All right. Yeah. Well, that's not the most reimbursed labors to writing books on gold standard yet. It's important, but people do not appreciate it. The masses. Yeah, that it's flying by them so far. You know, it's unfortunately, but some people do appreciate it. So there are people, quite a few, who do, which is a good thing. You know, it's not for the mass audience. So I really, Nathan, really want to thank you for your optimism. It's this is what I appreciate, because you know I'm a zero hedge reader. You know, and you know this. you know how gloomy they always are. Too gloomy, I would say. I'm a bit of an optimist myself, but yeah, thank you for that.